So in this video, I'm going to show you something that is the most important. Okay, the most important thing is even more important than your technical analysis. It's more important than your fundamental analysis. And this is the most important video on this channel, and please pay attention and watch until the end. Okay, now let me show you my Binance right here. Okay, you can see I kind of do some manual trading as well, because you can actually make more money if you do manual, but you know, it's a bit more risky. And basically I'm doing 90% using bot, 10% I'm doing manual trading. I open position manually by myself. And in this video, right, I'm going to talk about averaging, guys. Okay, averaging is very, very important. This exists in any type of market. This includes gold, stocks, it includes crypto. You know, heck, if you want to trade wife, you know, you couldn't even use this thing. Okay, so this is the basic fundamental of averaging. Now let's say, okay, we're not going to use a chart here. Okay, we're not going to use a chart. We're going to use this mini chart so that everybody can understand it easily. So I will use a easy number, 10, 8, 6, 4, 2, a nice number, so that we all can understand the process easily. Now this works for spot trading and it also works for futures trading. Okay, it's the same thing. Now let's cover what if the market goes down. Okay, what if the market goes down? So it will work for both spot and futures. So let's say you buy a coin. Okay, let's say today you buy a coin. Okay, this is the time at the bottom. This is time. Let's say you buy one coin here at $10, and then suddenly the price goes down. Okay, what happened? Do we sell that? Of course we're not gonna sell it, right? We want to make profit, so we wait. Okay, we wait until the market rebound. You know, you could do an averaging instead if you want to. Here's how averaging works, guys. So when the market goes against you, okay, let's say this is $8, instead of you buy one, you're going to buy two. Okay, now you buy two more coins, so you averaging out the price. So the price is no longer $10 per coin. Okay, since you bought another two coins, this have cost you $10, right? You buy one coin at $10, and then you buy two coins at $8. Now you spend $16. So what's the total now? You buy one coin at $10, and then you buy two coins at $8. So total will be $26. Divide by the total of coins, you get the average. Okay, this is called averaging. Okay, you get the average price, which is 8.67. 8.67. So your average price is no longer at $10. Your average price is now at 8.67. So if the market rebound above this level, you're already breaking even or making profit. So what happens if the price goes even lower? It goes against you even lower. It goes down to $6. Now this is very interesting. We buy even more, right? We buy even more. This is called Martingale strategy, guys. Okay, you can Google it up. Okay, you can Google it up. What is Martingale system? Okay, you can learn more about it. If you are completely newbie, you never heard of it before, you can go ahead and learn a little bit more about it. Basically, you buy double every time the market go against you. Let's say it goes down to $6. Now we buy 4. Okay. So now what is your average price? We have to add all the amount, okay, which is $10, and then we add 16. Then we add, 4 times $6 is 24. So total we have invested $50, and we have how many coins in total? We have 7 coins. Now the average price is 7.14. So we'll put right here 7.14. So let's say if the market suddenly reverse, okay, if the market suddenly reverse, hit this 7.14, you already break even. If it goes a little bit higher, you already take the profit. Okay, guys. So this is why it's so powerful. You don't have to wait, okay, from this top anymore, because your average price is not $10. Your average price is now 7.14. If you are playing future, this is called your entry price. What if the market goes against you even further? Okay, let's say the market is very bearish, so it goes even lower. So let's say it didn't touch your 7.14. Instead, let's say it goes down even lower to $4 per coin. Now we buy 2 times of the previous one. Now we buy 8 coins. Okay, we buy 8 coins at $32. Right? 8 times 4 is $32. So what's the average price? 10 plus 16 plus 24 plus 32. Okay, this is your total. Divide by the number of coins, which is 15. Now your average price is 5.47. 5.47. So if the market return, it doesn't have to go to this level. It will go to this level, and you will already take the profit. Let's say if the market even go lower, guys. Let's say $2. Now we buy even more. Okay, we buy 16. So what's the average price? Just now was 82. We plus 16 times 2, 32. So we divide by, how many is this? How many total coins? 10, 15, 31. So now our average price is 3.68. Okay, so the market just have to rebound and hit this average price. Okay, the market just has to rebound and we already take the profit. Now, how much is the profit? The profit is the total amount of your money, guys. The total amount you have invested, which is 114. 10% of that 114. Now, if you're using futures, you can add the leverage. Okay, so you can see that's how averaging works. Now, with one condition, guys. Okay, obviously with one condition, this should be a legit coin. Okay, it shouldn't be a shit coin. If that coin is a shit coin, and if it goes to 0, there's no point of you doing averaging, right? You are adding up to your loss. Okay, if this is a shit coin and let's say it rug pull and then everything goes to 0, so you got to be careful when choosing coin. Make sure the coin is legit, make sure there are team behind it, it have big market cap, etc. Right, the fundamental still very, very important. Now, if you are playing futures, it is the same with going up. If you open short position, it's the same thing. When the market goes up, you will do averaging. Same process. Now, this is very important, guys. And this is where money management is very important. Money management is very important. So I always told you to start low, okay, with low margin. If you start with big margin initially, let's say you have $1,000, right? Yes, let's say you have $1,000 and then you open up $100 here. Guess what? If the market goes against you, you need to add 200. So this is already 300, guys. If it goes against you, you need to add 400. Now total is already 700. Can you see that? Where the problem is? Okay. And this is not including leverage, guys. If you're including leverage, you are essentially borrowing money from the exchange, you know. This will get you liquidated very, very fast. So that's why I always told you to start with low initial margin when you first open your position, because as time goes by, this will eat up a lot of your capital. So money management is very important because we cannot control the market, guys. remember, we cannot control the market. We have no idea where this is going to go, whether it's go up or go down. But if we can do averaging, right? If we can do averaging right here, right here, right here, right here, one day, if the coin is legit, it will reverse. Okay, it will make a comeback, and this is when you're gonna take the profit. So this is very, very important. Money management. If you are playing too much, you know, when the market goes against you, it can eat a lot of your capital. It is quite okay if you are playing spot, but if you are playing future, it's very dangerous. You could get liquidated and lost all of your funds. So that's why I always tell you to start low, and as time goes by, you will gain more experience, and then you will know your own sweet spot. Okay, you will know how to manage your own money in the future, because you know, experience is the best, right? You try it for a few months, and then by experience, you know your sweet spot later. So this is why I told you to start slow first and educate yourself more on the market, and most importantly, your wallet management. Because we as human, we are very emotional. Okay, very emotional. We make stupid decisions every time. So at least you need to have your money management right. In case you make wrong decision, you can still do averaging. And by the way, you can use this Martingale calculator to know. Okay, this is the website. I'll put a link in the description box below. Let's say 50-50 win rate ratio, and let's say your trading capital is 100, and if you start with $1, you can expect this much of averaging. Okay, this much of averaging, only 1, 2, 3, 4, 5 or 6 averaging at most. If you have $500, you know, remember guys, this is trading balance, not your wallet balance. If you are using leverage, let's say your wallet have $1,000, your trading balance per position, you know, I personally would use like 10%. Okay, let's say I have $1,000 in my wallet, then I want to start a coin. Let's say I want to put $100 for that coin. Okay, I'm willing to lose $100 for that coin. So I will raise 10% of my whole wallet. Okay, 10% for that coin. So if I start with $1 margin, I can expect this much averaging that I could do. What if the market goes even further? Now it's up to you. You could wait for the market to rebound, or you can add a trading capital. Okay, you can add it. You can see it. The more you add it, the more averaging you can do. Now I want to show you wave. The wave is very scary lately. If you see wave, it was a clear bubble. Okay, look at this. It goes up by quite a lot. Look at this, 500% guys, in less than a month. Okay, so this is a very huge bubble. For those of you guys who are long in this position, you probably got liquidated already, because you can see that for wave, right? Let's say if you open position here, look at this, it has dropped down by 60%. 60% guys, that's a lot. Okay, if you are using leverage, it's even faster. Because you are using leverage, you are borrowing money from the exchange. So this is why money management is very important. If you open too big of positions, it will eat all your capital very, very fast. So through experience, you will understand your sweet spot. Now we don't know, okay, when this is going to reverse, whether in $20 it will reverse, or it could even go down even, you know, to this level. Okay, look at this, 60 to 10 guys. This is literally like 5 times of this chart. 60 to 10. Okay, 5 times. So we're probably gonna do like how many averaging? A lot of averaging, right? So you gotta be wise. you gotta look at the chart, right? What's happening here. And sometimes, if you see something that is going up too fast, it is most probably is going to go down very fast as well. So you got to be careful. Through experience, you will understand how the market works. But at the end of the day, we cannot control the market. What we can control is our wallet management, okay? And the amount of trading capital that we are willing to risk per position, guys, okay? Per position. And your initial margin should be, I would say, 1 to 2% of your trading capital. Ideally 10% of your whole wallet per position, okay? And also ideally you should have some backup as well. Have some backup in case something happen, or again, at the end of the day, through experience you will know what to do. And hopefully this video kind of helped you about averaging. Okay, this is a very fundamental averaging and a bit of Martingale strategy. Hopefully this can help you, this insight, and implement it. See it for yourself. Find your own sweet spot. You will know how much money should you invest and how much money should you put in your trading capital and how much is your initial margin. This channel is just to educate you guys so that you become smarter and won't get wrecked by the vicious market. Okay, this is crypto market is very, very volatile. Like altcoin is even more volatile. Okay,